2008 versus now. I think this is the first time we've seen them hiking rates into a recession. And Rob, I know you've been following this as well. What are you thinking about everything that we're seeing happen now?
Yeah, I like all the points that Rafi and Dave have made, and it's all really good data. And I think if we just were to look at this as another market crash, that's where you would stop. I think the last couple of weeks on my live streams, I've been going further. Last week, I talked about the derivative mess because that points to the amount and the size of what this collapse is going to be. And then last night, I pointed out that basically, I think the big money front ran the Fed and all the central banks. And what I put together last night was the money stock has moved. It's gone, the M1 and M2 have gone lower since March, according to the Fed's charts. If you look at the data tables, however, there's still enough sloshing around in the economy and reserves. It's not as if we've hit the big crash. So I think what Rafi is predicting is going to come true. He's absolutely correct. Preceding all the previous big crashes, you had specifically a retraction in M2. But what I also found was the selling, the outflows in the bond and stock market started back in September and December. And then I found a Reuters article, and of course we all knew that this was the case, but it's interesting to see in the financial media that the central banks were talking July of last year about tightening. And I think there was a lot of signals to big money, hey, this is coming next year. And so you put that together and you see all the people moving money out of bonds and stocks dating back to last September. And to me, that just says the big guys were front running what they knew was going to happen. They knew that the Fed was going to tighten. They knew that the money supply that had been created, M1 and M2 and M0 that had been created during the pandemic in 2020 was eventually going to hit inflation. Then what happens now? We have inflation, right? But the big money, I think, got out of a lot of their positions in stocks and bonds before the inflation came. And it may seem counterintuitive for a second until you look at something called real M2. So expanding upon what Rafi has been documenting so well, the real M2 is a Fed chart that's put out where you look at M2 deflated for the CPI. Now, I don't think any of us on this program thinks the CPI is the real inflation number, but let's just use it. It's the government printed number. If you look at the real M2 deflated by CPI, it's been falling for longer and more precipitously, which basically means in a nutshell, the money now that's sloshing around the economy has less effectiveness. And it also means that the end game for the Fed is here. The Fed cannot print more dollars and have it stimulate the economy because of inflation. As long as there's high inflation, the more that they print, the marginal value of each additional dollar actually becomes negative. And that's at the point where we're at. So this is the end game for the Fed. But I think if you add that to the fact that people were getting out of assets and were front running what they knew was coming this year, I think it's pretty clear that what's happening is the big financial players are trying to, the people are going to be left holding the bag. They're going to give the bag to the people. They've already started exiting their positions and getting out of Dodge. So I think it's more of a planned demolition, in my opinion. And I would argue that 29 and 2007, 2008 were similar. But this time is different. And this is what I want to impress upon the audience. This is the end of a fiat system. This is the end of the dollar. It's done. It's toast. We're going to have the central bank digital currencies if the people will accept them. Who knows? Maybe Bitcoin does well. Gold and silver will certainly do well. But this is the end of the dollar. So it's different than 2008 and 29. We're out of that system. This is a collapse of the 100-year monetary system. This is also, if you consider the research of Sir John Glubb, the end of the dominance of the United States as world superpower, because that happens about every 250 years when you look at his research, pretty much like clockwork dating back to the ancient Assyrians. So we're going through bigger changes. So the bigger thing is, how much did the financial elite get out of the system before they started to crash it? Because remember, the Fed is a private entity. It's owned by big shareholders, which are commercial banks and wealthy families. And they know what's going to happen before it happens because they're the owners of the Fed, even though the Fed, quote unquote, reports to the US government. It's a private banking entity. And so it's a controlled demolition. My question is, how big is it going to be? I've always said, dating back to when I wrote the book 13 years ago, it's going to be bigger than the Great Depression my parents lived through. It's going to be bigger than what we saw in 2008. And I think we're seeing the death of the financial system. I think we're seeing a reset. And I think the new era that's ushered in, if you're not in gold and silver specifically, you're going to be in trouble, because I don't think anything else is going to have value. And what I've been talking about the last few weeks is extras pyramids folding in on itself. All the value is coming down from all those derivative crap that the big money's gotten out of, and it's going into gold and silver. And so I think this time is going to be different. I'll be talking about that at Silver Symposium here in August. That will be my presentation. This time will be different. because it's the demolition of the current system and ushering into the new system. So I think it is everything that they've said, but I think it's also more than that. And I want to broaden that picture for people to look at, the players, what's going on, where those money flows are going. And you watch the money flow into and out of assets, it's pretty clear what happened and who benefited from that and who's not going to benefit from that.